lunchtime fix of a little bit of meaty interviews, and we're going to be starting off with the Ernst&Young quarterly survey into banks. What they do is they talk to a whole lot of leading players in the major banks, insurance companies, investment banks, merchant banks, and so on, and then get the reaction back from this sector of the market to give us an idea of what they think about profitability and how things are going generally. Not very good news to come out of the latest survey, and perhaps that's part of the reason why banking shares have been under pressure. But if you hold those banking shares, don't get too concerned yet. We have got the author, Emilio, Pera, in the studio with us. A little bit later, though, in the program, we're going to be talking to colourful property entrepreneur Nicky Vontas. His company has been listed on the JSE for quite some time, Bonatla, going back a few years. It was also one of the favourites of the players in the MoneyWeb Make a Million competition. So one of the traders' favourites. We'll be finding out why the stock is suspended. There are also a couple of big announcements that have come back out in the past week, and when we might see the stocks getting traded, and when some of those big goals and plans and dreams of Nicky Vontas might finally come to conclusion. But first, Emilio Pera from Ernst&Young is here. It's the 27th quarterly report that you have released. Why do you do it?
That's correct, yes. We've been doing it since 2002, and it's just an index that we do on behalf of the industry, just to demonstrate the trends in the market.
And completely confidential with the people.
Completely confidential. Stellenbosch does the research on our behalf, and we don't even have insights into the individual responses.
What kind of questions are asked, Emilio?
Effectively, it's looking at trends in the market, looking at topical issues and concerns that might arise in the market, and it's focusing on all aspects of the banking business, both on the retail banking and also investment banking side.
And over the years, you've done 27 of these.
Yes.
Is what comes out of the research reflected in time in the profitability of the banking sector?
I suppose it's a reflection of where the market's going, and it is, as you mentioned earlier, it's looking at the perceptions of the market and looking at the questions. It's also where they believe that the market is going.
So sort of a leading indicator there for bank profits?
It could be.
Could be, or is. Have you not done back dating?
We haven't specifically looked at that. We've been focusing on looking at the trends in the market. We haven't done that direct correlation.
So what do you use the report for?
Effectively, as I say, it's a service to the market. We don't. It's obviously an indicator from our perspective as to where the market's going. As an assurance provider, we also focus, or would be interested to see where we should focus our audit efforts going forward.
All right. Retail banking, certainly the information that comes out is not good news. Confidence down for the first time in 2.5 years.
Yes. Since 2004, it's been on a 100% confidence index.
Which means what?
Effectively that the market or the industry is comfortable and fully confident in where the market is and the prospects in the market. For the first time, it's come down to, in the retail banking sector, to 92%, although investment banking has remained at 100%.
We'll get to investment in a moment, investment banking in a moment. What does it actually mean, though, if you go from 100%, where I suppose everybody's really jolly, yes, down to 92%, people starting to get cautious, or not quite yet?
I think people are starting to become cautious, but I do have to stress that 92% is still quite a high confidence level in the market. I suppose just looking at where the developments over the last quarter and towards the end of the last quarter, the implementation of the National Credit Act, the rising interest rate markets that we've had over the last 2 years, there's been a number of factors that has had an impact on the retail banking sector specifically.
So nothing there should be too much of a surprise.
Exactly. All of those, when we did the previous review, the questions were already asked as to what that impact was and why it was still at 100%. And as I mentioned, it was right at the end of our previous review period that the National Credit Act came into play. So it is the output or results of that that's probably featuring now.
Emilio, why is that so relevant, the National Credit Act? Surely it was only supposed to be something for banks to, particularly retail banks, to get their books in order.
I suppose just looking at the process in getting ready for that, from a regulatory perspective, there were additional requirements that had to be complied with. Obviously, it's from a documentation perspective, it's a more onerous process to approve credit and also to.
Does it mean that were banks then granting credit that they shouldn't have been granting?
I don't believe so. As I say, it's more onerous requirements rather than that it was that credit wasn't appropriately provided previously.
Yeah, it's a strange thing to always get the National Credit Act thrown at you, but I guess more important at the moment, and something that's very relevant, is bad debt. Was there any evidence of this rising?
I suppose in looking at the results that has been published by the banks over the last couple of months, there has definitely been a rise in the bad debts.
But from your survey?
Our survey doesn't specifically look at the financial aspects, more the qualitative aspects. So obviously that would impact on the confidence levels, but we don't specifically look at the quantitative aspects.
So if I read you correctly, if the bankers are feeling a little less confident about things, if they see bad debts rising, then the confidence level of the overall index would fall.
That's correct, yeah.
Mm-hmm. Any impact of higher interest rates that you're seeing in the results? For instance, margin squeezes, was that part of, did that come out at all in the discussion?
I think similar to the comment previously, in looking at the increased interest rate environment that we've had over the last 2 years, it's definitely coming to a point, together with other factors like the National Credit Act, where it is starting to impact on the market. And again, looking at it from a qualitative perspective, it possibly impact the confidence levels coming down.
So that's investment, that's retail banks. I guess ABSA would be the leading retail bank, and some of the other banks have got big retail operations. You're now looking at the other, or perhaps you could look at the other side of the survey, which is investment banks, where one would find a stock like Investec, which has actually been the hardest hit of the lot. Now, it's a counterintuitive reaction looking at your results, because investment banks, in fact, are doing pretty well.
Exactly. And just to consider, all the big four banks also have quite a strong investment banking arm linked to them. And the survey does also cover quite a large portfolio of investment banks in the survey. And it shows 100% confidence level. And I do believe that's because of the infrastructure development. There has been no indication on the slowdown at this stage around the buoyant market that has been prevalent over the last couple of years and months.
So the big ticket items, as far as banks are concerned, are still flying through the books?
Yes.
We saw yesterday the publication of PSG's financial results, and what was interesting there is that they're also moving into the investment banking market in a big way on the BEE transactions. Did that also come through at all, that the BEE train continues to roll?
Yeah. We didn't specifically look at the individual factors as to, I think, private equity transactions and large transactions that come through the market obviously generates business and would improve the confidence levels in the market. So if there is volumes and big transactions coming through, so that would obviously contribute to the confidence level.
So the bankers themselves are telling us this. Retail banking, they're getting a little cautious. Investment banking, as confident as ever. Is there a lag usually between those two parts of the banking industry? In other words, does retail banking turn down before investment banking?
I suppose if you look at the retail banking environment and especially middle to low income market and looking at the interest increases and the factors impacting on that market, it is definitely an indication that there is that will be impacted first.
But going back to 2002, is there a trend between the two? Does the one lag the other?
That's not, I haven't specifically
no correlation.
Yeah.
And how are the bankers reacting to this result? Are they doing anything, particularly on the retail side, to reduce the exposure or the cost of what they're seeing happening to their bottom line?
I think considering the banking industry in South Africa, it is very well regulated and it is a mature and responsible market.
Well, I mean, are they cutting back on hiring new staff, for instance?
I suppose we don't look at specific banks, and I suppose there has been an increase in the expenditure over the last year, and that is increasing at the same rate as it has previously. So there hasn't been an indication as yet that there has been a cutback on that.
Emilio, Pera is with Ernst&Young. In just a little while, we'll be talking with a colourful property entrepreneur, Nikki Vontas.